The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, where I am physically located today. I'll be traveling for the next 6 or 7 weeks, so we'll see how that works out. But the rest of the week, we're going to have Rich Anderson on today at 9:30. Tomorrow is Arch Crawford from Crawford's Perspectives, the famous financial astrologer. And on Thursday, we have another financial astrologer, one of our regular guests. Norm Winsky will be on to talk to us about the planet Mercury going to direct motion again, and we have the full moon coming up pretty soon also. So we want to keep an eye on all of those. Now, the first chart that I posted in here is not really a chart. It's a picture of a 1964 Porsche 356. That was my very first car, my very first new car that I bought right out of school. I had a few bucks in my pocket from some corn trades, and brand new for $3,100, fully loaded. This car is now being sold by a company in California, Canepa, that sells these reproduced cars, not reproduced, but reconditioned cars. And this is basically a brand new car you're looking at now. The price of the car is $265,000. That's down from where it was 6 months ago. They've been trying to sell it for 6 months. The original price came out at $355,000, and now it's dropped $90,000. I hope you can see the car. If you can't, it's because of a glitch. I hope it got in there, but all right, Jay Bird, let's. That means that nobody's seen the car. Let's see if I can get this puppy up to see the car, and then we will. If you can't see the car, there, I can see it. How come nobody else can see it? All right, let's try it again. Ready? 1, 2, 3. Let's see if it's better now, and we can see it better that way. If not, it's not a big deal, and it's not a chart. There you go. Okay, that's it. Anyway, they sell these cars at exorbitant prices, but they do a perfect job of reconditioning them. They have the same setup that Jay Leno has. In other words, they can reproduce any part off of a machine that basically clones anything. So that's the thing. The coolest car that I've ever seen in there was a 1953 Cadillac Eldorado. It was the very first one that came out. It was a convertible, and it was boy, it was beautiful. Robin egg blue with red interior, and it was $175,000, and somebody bought it the first day it was out, but it only had like 6,000 miles on the original car. So anyway, let's get the reason why I'm talking about the cars is there's a huge bubble that has just happened in these exotic cars. They started in January at the Barrett Jackson auto auction. The things have they've dropped quite a bit. From last year, previous sales were down 25%. So we've seen quite a bit of a move, to the downside. So we want to keep an eye on that. The second chart that I posted in here to Tiger TV, we talked about the other day, and that was copper. As you can see, we rallied about 4 cents off the bottom of that ABCD pattern, and that's what we're looking at. So we should get another few more cents out of copper, and we'll be able to take a look at it. Okay, let's get back to the things that you have interest in, and we will have Rich Anderson on at the break, and we'll be able to chat with him. Yesterday when we were on, we were talking about the gold market and the fact that we were getting ready to attempt to hit that 78% retracement up at that 1289 level. Well, we got to 1290 and change yesterday before we broke the usual $17, which it usually did, and went down almost exactly $17. In fact, it did to 1272, which was the harmonic number. And so far, silver or gold has been holding up at the same at the same area that we've watched before. So that sets up a potential in the gold market, and I'll bring this up to date so you can see what's going on, and you'll be able to see that that sets up a potential price objective at the 1267 level in the gold, and that would be an ABC. You're going to have some higher bottoms now from the 10th. That's going back over the last 8 trading days, so that's going to be really strong support at that 1268, 1267 level. The silver market looks much, much weaker. We pointed that out several times, and it's still doing, pretty much the same thing. So this is an interesting spot. Folks, the important thing here is that if we break that 1260 area, that's going to set up the really large ABCD pattern down to that magical number, i.e. not magical, but important number at $1,190 in the gold. And that would be an ideal situation, because then you would have a 4-week correction coming in at a 2-week correction of the longer move with a perfect ABCD structure. And that's the one I would really like to see. I don't know if it's going to happen or not. Remember, I missed it the first time it happened. It only got to 1212, and then it ran up to 1306. So these markets don't always do what you want to do, but sometimes they do, and that's the way it happens. Anyway, we will keep an eye on that very, very closely for important, purposes, of course. But that's what we're really watching now, is the fact that this thing could hold that level very, very nicely. Now let's switch over here to the S&P 500, and we will get that up here. We'll take a look at that. Here's what's happened in the S&P yesterday. As you can see, we last night we came in and we made ABCD patterns overnight. Then you see we had a little bit of a rally. We went into consolidation, and then we had a huge rally, almost exactly within 1 point. One of the things you have to remember is any market that can take 25 points away from you, or 30 points, can give you 30 points really, really quick, and vice versa. So these markets are extremely volatile, and that's what we really like to see. So they did that pattern, and that means that the next area of support should be at around the 2052 level in the S&P, if that is going to be the case. And that's what we have to really keep an eye on. That's the main thing of the things that we want to be watching. That, in my opinion, that is one of the more important things that we're watching. Whether that means anything or not, we have to wait and see. But that's literally what we're trying to do here, is to line these up. Now, there's another market that I wanted to cover here. I've got to go through them here relatively quickly because we've only got a little bit of time because of our good friend Rich Anderson coming on to join us. But we want to take a quick look at the bond market. And the reason why is we have that same scenario in Treasury bonds, looking at this hourly chart where we've come down and we made a 78% retracement last night. And we take a little break here, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to share with you a template that has been done by one of my students out of New York. You'll notice this is the same pattern that we were looking at when we looked at that S&P, and all he's done is to quantify it by looking at the ABCD structure and breaking it down into the AB leg and the CD leg, and also looking at the relationships between price and time. And when these relationships come to the same area where he can quantify what his risk is going to be, he places the trade, and then he has his first profit objective and then his second profit objective, and he moves on to the next trade, following that. So that's what he's been doing. He's having some very good success with this. Like everything else, it's far from perfect, but it does give a pretty good idea of some of the things that are happening in some of these markets, and it makes it a whole lot easier. So just keep in mind that's something that we have to keep in mind. That's for sure. Let's just take a brief summary here of what's happening in the overall markets on a global basis. We stopped at that 61% retracement yesterday in Hang Seng. We also did the same thing in the German DAX, so we did get a very good bounce. But the key level that we're looking at today is at 2050 to 2052 in the S&P 500, because if that fails, we will be starting down, more and more, and we'll see if that's going to be the case. But we're having a lot of choppiness. Because, you don't really have to worry too much about that when it's going on. So that's the important to keep in mind. Okay, now we had a question. Wow, did natural gas get all the way down to 205, Mr. Z? Wow, that's really amazing, because that's what we were watching the natural gas for a potential for day. Wow, I can't believe that. Where is that chart? Doggone it, Larry. You did it again, didn't you? Son of a gun. You lose more of these darn charts than I want to believe, but anyway, that's the way it goes. So, I got it. Hold on just a second here. 205, it got to 205. Okay, yeah, it got down to that 61% retracement of that previous move, and that's pretty good. Now, if this thing gets above 220, it is off to the races, because it hit that 61.8 level of 218 7 times here in the last few days. Practically out of the last 13 days, it hit it 7 times. So that tells you there's very strong resistance at that 219, 220 level in the natural gas. So the natural support is down here, probably around that 205 level, which would have been a 61% retracement off the old low. But if we get above that 220, boy, you don't want to be short that, because that has a real chance of moving, because it's got a lot of resistance. And if that resistance is gone, the only thing that can stop it is a much higher number that's just way up around the 230 level in natural gas. So we'll want to watch that very, very closely. Okay, now remember, we have Norm Winsky on Thursday, Arch Crawford on Wednesday. We have Rich Anderson on in a few minutes, but we certainly want to listen to Arch and Norm for their Astro stuff. And Rich always has some good stuff, especially since we're having such tremendous swings in these markets for the grains, which is very counter-cyclical, but they certainly don't want to make it much more difficult than anything else. However, I think one of the most important things that's happened here in the last 24 hours is the fact that we did get that crude oil up to the 48.40 level, which was spot on exactly what we were doing with the ABCD structure from the last time we had a major rally going way back last year. In other words, those rallies lasted $14 per barrel, and that's what we've done, so far on this one. We came within, I think, 30 cents of the exact $14 level. So watch that one also, the crude oil, because, everybody's watching it, and everybody that's bullish, and mainly that was probably due to Goldman Sachs coming in yesterday and giving the approval for everybody to buy it, being the nice folks that they are. So that's the key to that one. Because if we clear the 48.60, 48.70 level, we're certainly going to go to 50, which is the ABCD structure on the oil that we've shown several times in this area. But this 48.50 is really strong resistance. It's only 50 cents away from where it is right now, but there's very strong resistance, at that point. As far as the foreign currencies go, the yen is held up extremely well. It needs to get above 110 in order to get moving. We're trading at 109.25 right now, and there should be some strong support about 50 pips lower in that Japanese yen. So that's another one that seems to be moving in the right direction, as is the euro. The euro, of course, rallied 70 pips off the bottom yesterday and then went down and tested the 61% retracement of the previous move, and now it's just in a really tight trading range. So there's not a whole lot happening there. The one that's interesting from the grain standpoint here is the corn market, because the corn market has some very interesting patterns forming here, about 2 cents higher. And since we are in an area where corn could easily be getting ready to have at least some type of a sell-off after being up several days, we want to be able to be sure to keep an eye on that one very, very closely. Okay, I've got a request here to take a look at the silver market, and we're going to do that right now and bring it up to show you what's happening, and you'll see that the silver didn't rally nearly as much as the gold did. The gold, rallied. Silver should have got all the way up to 1780 if we would have done this in the gold, but we got up to about 1750 is all we were able to do in the silver market. So that's showing a little bit of weakness again. Again, we're not having any really big open interest information. One day it's down, the next day it's up, but there's not many new players, coming into the silver market as you would expect it to be after that breakout above 18, and then we sold off, immediately after that. So I hear you again, you hate to use that word hopefully, but this is what I'd like to see, is a nice correction in gold, but I guess the whole world is looking for that nice correction, so we might not get it. That's, the bottom line of what we're looking at here this morning. As far as the gasoline and heating oil, another question's popped up. They have the same type of resistance level that we're looking at here in the crude oil, and around that 48.50 to it could get as high as $50, I suppose, on some type of a news announcement, but I don't believe we're going to get much above $50 a barrel in crude. In fact, it's beginning to start to look like it wants to, to roll over. Whether that happens or not, we'll be able to see. So if you have any questions this morning, to call in for Rich. That's 877-927-6648, and I'm sure he'll be happy to answer them for you. So we'll take a little break, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we're getting pretty close to have Rich Anderson on the line here. Not yet, but he'll be here soon, and we're going to be checking out here. The markets are opening. We're a little bit lower here in the stock market early. The S&P is trading at around 2060. That's down 10 points from the overnight high. And we're also a little bit, we're unchanged on the euro, and we are actually about unchanged on the slightly lower in the NASDAQ. So all of those are very smart, slightly lower. And we got a little bit lower level in the crude oil also. So that, that might make it. We got Rich on the line now, I hope.
You betcha. How are you doing?
Hey, love this technical stuff. We're doing good, my friend. Listen, by the way, I wanted to tell you, Dr. Al Larson out of Colorado said to say hi to you. So one of our voices from the past. Rich, the question that we had asked us by some of the people, the reason why I've asked you to come on again quickly is the fact that we've had this, 80-cent move in soybeans, vertical. And is there anything that you're seeing in the complex that give you some information for the folks here?
Well, basically, you don't want to fight the money flow. And last week, the ETF broad-based ag money flow was up 22.9 million, and that's outside our futures trading. That's just people that don't want to buy a futures contract; they just buy an ETF. So there's been this huge flow in on these beans. They caught the processor short. Remember, 2 or 3 weeks ago I was on, and I told you how that China had bought 20 cargoes on Tuesday from South America and 9 from the U.S., and that was the day that the July-November beans went from -1 3/4 up to actually 23.5 or change that day, and then it peaked at 29 3/4. Kind of had a double top there. And that's, previous to that, we'd been 5 to 6 under for 5-6 weeks in these July, Novembers. There was no demand. Right now, we're crushing beans. The crushers have 6 to 8 weeks of supply of beans locked up, and they're making 92 to 93 cents a bushel. That's huge. Oh. Typically, they'll make 50, 60 cents, and they're laughing all the way to the bank. But 92 to 93, they're really, they're going to crush 24/7. I'm kind of thinking the one we were just talking about in the office was meal. Dave used to run a crushing plant, and Peoria. It's surprising to me the meal has gone up this high. The bids in the cash market for beans, are 10 cents under where the offers are. I'm kind of looking for that spot to, probably buy some puts, sell some calls in the meal. I think the oil meal share is wide enough that the oil might catch and the meal might give up a whole bunch, and that's kind of how I'm looking at it. Buy some puts, sell some calls, and meal's number one. And now the bull side is that South America. There's two bull side things. South America, where they took 5 million metric tons out of the crop because of the rain, and some people say, it might even be closer to 10. We'll have to wait and see. And then the other bull is we were in an El Nino for a good period of time, and when it switches to La Nina, so when the ocean goes from warm to cold, if it switches at this time of the year, that has the most impact historically on the central U.S. growing, and that's another thing the bulls are betting on. So it's money flow coming in. They caught a bunch of the cash traders, short, and ran these markets up. But I think they're going to, tread water, and then there's going to be some backing and filling. I'm not saying that we can't go up a whole bunch later, but I'm looking for retracements that will give us an opportunity for that later in the summer if there's a weather concern. But I think we're fully priced right now.
Rich,
that's my view.
If you notice that these ETFs don't really track nearly as well as the futures themselves, if you buy an ETF for soybeans or corn, they'll go up with them, but not at the same velocity.
Absolutely. And if you're trading the doubles or triples in crude oil, or if you hold that more than a couple of days, you're just giving your money away. But yeah, it's because it's all about when the flow of funds comes in, and believe me, the guys that have started these ETFs, and they start about one a day for the last 5 years, they're not starting because they're going to lose money. They're starting because it's like almost free money.
That's right.
That they get in it.
Yeah, they built them like options so that there's a decay, and people don't understand that, and that's what causes part of the problem.
Right, absolutely, and the corn. The story in the corn is that if they were to reduce a couple million acres and move them to beans, well, then, you could light a little bit of a fire under corn. But Informa came out last night, and they see maybe 225,000 acre change so far. We won't know the real numbers until the end of June report from the USDA. But if I am looking at the beans today, and I am looking also at the meal, and it depends on your time frame, and you got to control your risk, and even by buying puts and selling calls out of the money, that's still not a risk-free trade. You have to manage your positions and know what your risk is.
Yeah, we don't get risk-free trades, very often. Can we switch over to what you see happening in the crude oil market, Rich?
Well, you've got two things. Well, two things going on internationally off the North American coast, and that's Nigeria and Libya. So I think it was Chevron shut down some rigs. Anyway, there's been a contraction. China's oil production was down 4.6% last month in the month of April. And then, of course, we had the oil sands fires up in Canada, where Fort McHenry, which is a fairly large town, almost completely destroyed from either the fire or the smoke. And so they've had to shut down all this production. Now, this production, as you get over 50, will start to come back online. But that's been a big thing. The thing that I watched to look for a bottom was the curve. Back when we were on the lows, you could sell oil 8, 10, 12 months out for maybe $10 a barrel over the nearby. Right now, the nearby is $47.92, and you go out to we'll go out to March of next year. It's $50.37. You only have a $2.30 elevation there for hedging. It's not motivating the guys, but you get the price up very much further. Basically, we've had 5 oil companies file for bankruptcy in the last 5 days. I don't know if you know this or not, but in the United States.
Wow.
I just read lots of stuff. But in any case, above a certain level, below $40, all these production and exploration companies, P&Es they call them, became high yield. In other words, they're risky investments, and so they were charging more interest. Above 50, they'll start to be able to lock in margins and do a bunch of hedging. And above 60, they'll be turning on the DUCs, the drilled and uncompleted oil wells. It's over 1,000 in North Dakota. They're all over.
Okay. Hey, Rich, we got to take a break. Stay with us, buddy, okay?
No worries. I'm here.
Okay.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Rich Anderson. We were talking about these 5 oil companies that went bankrupt just recently.
I mean, the last 5 days, Sandridge was the one yesterday. I mean, they're not big operations, but they're big enough. I mean, they're millions of dollars. I mean, it's a big deal.
That's right. When you're out of work, it's a depression. When your neighbor's out of work, it's a recession.
Right.
Yeah. Rich, do you remember back in the days? I wanted to get to that July-November bean spread that we did back in 1976 together, where Cook Grain was taking the other side of it all the time, and
right.
We were betting on a bull market, they were betting on a bear market, and they bet everything they had, and they lost. And I can remember those days when that spread went crazy. It went, I believe, $3.50 a bushel at one time historically. And what are we at about now? About 20 cents?
No, we're at 10.5 cents to July, November.
Really, only $500.
That one day it went from 1 3/4 under to 23, and a couple days later went to 29 3/4. We could easily, this is telling me that I should be looking real closely at the meal and the beans, because the bull spread demand isn't there. The rush is over, and this retest of the highs and the meals has caught my eye, and the beans haven't even retested the highs. They'll probably fizzle out around 10. I'd say 10.75 to 10.80, and so that's what I've got my eye on this morning. I've covered a little of my yen position, and I'm looking to put it back out up in the 93.35 to 93.40 if it gets there. I noticed that November beans just made a 61% retracement up here at 1065 this morning from the old high that we made. I don't know if that's going to stop it or not, but it didn't go too much above it. In fact, it hit it exactly and backed off. So that could be an interesting spot. I can never remember. Well, of course, my memory is not like what it used to be, but I can never remember seeing a cyclical move like this that happened, in April. I remember, several of them started in May. But I can never remember one in grains that started in April. But keep in mind, the investors have the relatively minor amount of money compared to past in the equity markets. The very wealthiest investors feel that bonds are not safe. They feel that stocks are fully priced. So where are you going to put some money? So they throw it into commodities, and with the leverage in commodities, you throw in just a little bit of money. It's multiplied by 20 times or whatever. If you're in the ETF, it's only multiplied by 2, but in anything else in the futures, it's multiplied by at least 10 to 20 times. I mean, because your average person doesn't understand that you don't want your leverage to be more than 4 or 5 times. That's the secret, to be under margins. Have way more money than you need.
Yeah, everybody used to do the Texas hedge, long the futures, long the cash.
Right. But so this outside money is coming in, and it's coming in ways that you don't see from the ETFs, and without the floors anymore, it's all electronic. And so you don't know when somebody's coming in, and besides that, they're using iceberg orders, so they got to order to buy 10,000 contracts, and it shows up as 7, then it shows up as 30, then it shows up as 15. And yet it's this massive order, and you don't see it unless you're holding the book, which is only the market maker.
Mm-hmm. The cattle market, what are you seeing there? When we got down to that 115 area after the report, it did exactly what you thought it would do, and I was curious of what you're thinking about cattle right now.
Well, I told you the other day I'd buy a 3.5-4 cent dip from any high. And we went from 24.67 on the June cattle down to 21.20, which is about $3.50 if you think about it. Considering, and it happened in 2 days. I mean, that's you've got to be ready. You've got to know that when it gets down X amount, and it's going to look terrible. It's going to look like I shouldn't even think about this. That's when you have to step in.
Yeah.
And so you go down to a shorter time frame, knowing what your risk is, and put some on. And then when it starts to go your way, you put some more on. I mean, that's what they taught me years and years ago, and that's what I do.
Little by little, better be greedy than needy. Listen, I want to thank you for coming on. I know you're really busy this morning.
Anytime.
All right, listen, buddy, we'll have you on in a week or so, okay?
All righty. Good talk.
All right, thanks a lot. You bet. That was Rich Anderson of Anderson Capital Management. He has to take off. He's got to do some work. Anyway, we're watching some of these things moving around. Not much is happening. We're selling off a little bit in the stock market, but nothing dramatically. We're getting very close down to this 2050 support level in the S&P. Now, if that doesn't fail, that's going to be or if it does fail, that's going to tell you that there's probably something a little bit wrong here, and you want to be extremely careful of doing this. So the words that Rich just gave us about the wisdom of these things is that these commodities have tremendous leverage because we're dealing with 20-to-1 leverage. You're buying something that's worth $50,000 and you're only putting up $5,000 margin, so you're working on a really high leverage. So you've got to be extremely careful. You can do this in stocks by using options, but anytime you do that, the risk is definitely greater, but the reward is greater also. So those are the things that you want to try to keep in mind. That's at least the way I'm looking at it this morning. So the bond that we're looking at earlier this morning, it's heading up to that 167 level. It held that support at 165.10. We're almost up a full point from that one. The copper's still looking okay. And we still think we're going to get a move down in gold down to that 20. Let's try it again, Larry. 1267, 1268 level. That's down about $8 from where we are right now. And I'll be looking at the long side at that level with about an $8 risk. It's jumping around really nicely. So it should have a good reaction from that point because it's a Gartley pattern down there at the 20. Wow, why do I keep saying 20? There must be a Freudian slip in here somewhere. 1268 level in the gold. Fact is, I should post that chart in here one more time because we did that earlier, and we want to be able to see it again. And here it is. So let's pull this up, and we'll take a look at it here, and we'll see what's going on. So there's a really strong Gartley there, and that's also a 135 pattern, folks, because the 1 came down on March 10th, the 3 came in on the 13th, and here we are on the 17th, and that would be a really nice support level in the gold if we get to that 1268 level. It's just one of those better patterns that we like to see. You've got higher bottoms at fib points with some minor cycle stuff. It's actually doing exactly what we want to be watching. So there's how we stand. We got a break coming up here in just a minute or so, I believe, and then we will see what's happening. Am I still on the air? I don't know if I am or not. Hello. Oops. Oh, I still am? Well, no one's told me anything. It's supposed to be on a break, but evidently they're not paying their bills today. Okay, anybody have any other questions in the den about the meaning of life or anything like that? Okay, let's. It was my fault, folks. I lost track of the time because Rich had to. He was signaling me that he had to get off. There was something that he had to do. So my guess is he had his selling shoes. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we had Rich Anderson on today. Tomorrow will be Arch Crawford. And then on Thursday, we'll have Norm Winsky from Astro Trends. So try not to miss it. They always have some really good information for us. It should be, very, very interesting, to hear what they have to say. I try to bring in as many guests as I can because I know you get tired of listening to these old jaws go up and down without, saying a whole lot of stuff. One chart that I do want to give you pretty good heads up on, and that's the a chart sent to us by our good friend Jim Bartolione at V50 Partners. This is a long-term chart going back in about 40 years, a 40-year chart on the Dow Jones Utilities, and you can see the 1, 2, 3 drive to a top pattern that is forming. It's also a double top that we're having that is equal to what we had in 2007. So you can see the resistance that we're looking at here in the Dow Jones Utilities. And of course, they are highly related to the interest rate and this quantitative easing thing because of what's happening. And that's what it looks like from this area of the chart. But this is a perfect 3-drive to a top pattern. It has everything that you could ask for, perfect ABCD, perfect symmetry, and it's just a chart. But the important thing, if you'll look at the bottom part of the chart, Bart is very good at picking up divergences. And as you can see, the relative strength in the market is dissipating quite a bit, much like it did in 2007. And if you look back again in 2000, it did exactly the same thing. So this pattern is lining up. And what that's basically telling us is that we're looking for an increase in interest rates down the road. Now, the bonds are still holding in a really tight trading range, of course, between 169 and 163. But once it comes out of that, it's really going to be what's going to be looking much, much lower in bonds, i.e. higher interest rates, because this experiment that we're having called quantitative easing is actually nothing more than that. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.